Great. So welcome, everybody. We had a great turnout. Hundreds of people from all around the world. I think the last I counted, 21 different countries are turning into this webinar for Challenger Banks, hosted by Tearsheet. I think that's testament to the work that the guys around this table and their companies have put in. I think this is, having covered the space for a few years. I'm Zach Miller, by the way, editor and founder of Tearsheet. Having covered the space for a few years, I think we finally hit in a sweet spot where we actually entitled this webinar, 2019, the year of the Challenger Bank, and I think it is. I think we have two of the companies around the table coming to the U.S. In the staging room, they were starting to ask when they were launching. I won't share any information, but there's obviously an excitement that the world of banking is changing, and these are the companies that are actually empowering that change. You don't want to hear me speak. I want to hear the other guys speak. So I'm just going to give a little bit to everybody about what to expect. We're going to stick hard to the hour. Everybody's busy. Everybody has things to do. So we want to close off by the end of the hour. There'll be two sections. We'll have a section where I have some prepared questions to get kind of group answers to. There's going to be a lightning round. We've never done this before. I've seen it done in other webinars. I think it's kind of fun so we get to know the people around the table as well. And then it's three sections. We'll actually have a section at the end for the last 10 minutes. If you guys have questions, we won't be able to get to all of them. But if you see in your panel, I think it's that way, there's a question section. And I'd love for you to put your questions through there. I'll be looking through them throughout the webinar. Again, we won't be able to get to them. Maybe we can send them to these guys afterwards. But I think that'll be great. And so, without further ado, I'd like to, introduce, we have three people here joining us. We have Chris Britt, co-founder and CEO of Chime. They're all going to introduce themselves after. We have Nicholas Cobb, the US CEO of N26, and Dan Westgarth, the North America General Manager at Revolut. These guys were handpicked. Their banks are doing amazing things. Their products are highly engageable. People are using them. They're signing up millions of customers. This is the future of banking. So thank you all for joining us. Chris, would you like to start? Introduce yourself.
Sure. I'm Chris Britt. I'm the co-founder and CEO of Chime. We are the largest and fastest growing company in the challenger banking space in the US. We're a San Francisco-based company and been around for 6+ years at this point in time. And we offer a suite of banking products in coordination with a FDIC insured bank partner. And we offer a checking account, savings account, and a Visa debit card, and a host of tools to help our members achieve financial peace of mind.
Fantastic. Nicholas?
Cool. I'm the US CEO of N26. We are a European challenger bank coming to the US in 2019. In Europe, we are based in Berlin, so headquartered out of Germany. Live in 24 European markets, are a fully regulated bank actually in Europe. I'd argue, and Dan may claim the same, we're the fastest growing challenger bank in Europe. We're at 2.3 million customers currently, again across 24 European markets, and are really on sort of a mission to bring what we've built in Europe out to the world, with the US being the first market to go live in 2019.
Great. And Dan?
I'm Dan Westgarth, the General Manager for Revolut North America. We are a European challenger bank expanding globally with the mission to reach 100 million users and offer our suite of products in several different geographies. So we're expanding to the US, Canada, Singapore, Australia, New Zealand, and Japan.
Fantastic. So I guess we'll start with you, Dan. First question, you guys are all, onboarding millions of customers. What do you think is driving the excitement at the customer level behind the challenger banks?
I think really it's the user experience. I think that challenger banks deliver a great user experience. I think that's consistent across the suite of products that they offer. I compare that to my traditional banking provider in Europe and the UK. For example, I have several different products delivered by that bank. I have a credit card, I have a checking account, I have a mortgage. The user experience that links those products together is incredibly poor. There are inconsistencies in the data. The bank's systems do not connect and do not pass data in the way that they should, and that creates a terrible experience for me as a user. And that really pushes me towards the challengers. And having used pretty much all the challenger products in the UK, in Europe, and now in the US, that really creates a buzz and pushes the challengers to the front of sort of the customer selection when it comes to banking products.
So it sounds like on one hand you have a very nicely designed product that the challengers have, and then on the other hand dissatisfaction with current products. Nick, do you see it similarly?
I see it similarly. I think that the dissatisfaction with current products basically fuels some of sort of the move over to the challenger banks. I think brand, which is obviously kind of be a fluffy word of a brand, and trust is also one of the key drivers here, that a lot of the younger population, but frankly also more our target segment is actually quite diverse in terms of age groups. People have lost some trust in the traditional banks, and people are very confident when it comes to trusting newer technology players. So I think that's definitely also an advantage of challenger banks, that they just have a new reputation, a new sort of vibe and feel to them, which makes people trust them a lot. And I think that's one big driver in all of this as well. And lastly, what I'd also argue is that prices are a key driver of people's decisions where they want to bank. And challenger banks, majority of us have free accounts, like genuinely free accounts, no hidden fees, no like ugly surprises at the end of the month, which also drives customer adoption from a pricing perspective.
So we have Dan and Nick's opinion, I think, which is very much colored by a European experience. Chris, what are you seeing something similar in the U.S.?
Yeah, unfortunately, I didn't hear. I'm not getting Nick's feed for some reason, but
sorry,
that's okay. But I did hear the first comment. I think it's far beyond just user experience. If you can go to the App Store, you look at someone like Chase, they get 5 stars. I mean, they actually, the banks have invested billions of dollars to improve their technology and user experience. It's not that bad. So of course, everyone here has slick mobile apps, but I think just thinking that we're going to win because we've got a slick interface is really missing the point. I think there's a huge portion of America that is struggling with the relationship that they have with the bank, with their traditional bank accounts, and so we provide a suite of tools that authentically try to help move people ahead with their financial life. And I think that starts first and foremost with a checking account that doesn't rely on fee income, and provides a suite of tools that help people get into a rhythm of saving money, and also just all the things you'd expect from a modern mobile bank account, where everything's real time. You can move money instantly. We give people their paycheck a few days early. We've got a P2P service that's growing like a weed. That's really easy to use, and that people really love. So I think we're really focused on the needs of a huge portion of America that is just struggling with the fact that the way that banks deliver and price their services at their core is adversarial and punitive in terms of the amount of fees that that the big banks are generating from these relationships.
Got it. Chris, we'll stick with you. It feels like a game show, by the way. But so you mentioned some of the things that, I think that color very much the American experience. How much does customer feedback, what are customers really saying behind the scenes and providing that feedback, and how much of that how do you take that and then, I guess, port that into future product development?
We use it all the time. We've got a Slack channel that we receive feedback from members throughout the course of the day. I probably read, 50, if not 100 comments from our members every day. We're also very active in social media. Of course, we can't rely on physical branch infrastructure and big pillars to earn trust the way banks have historically, but rather the reputation that we earn and the value that we deliver for our customers. So it's really important for us to make sure that they're satisfied with our services. And I think if you read our comments online, if you read the App Store reviews, you see that people really love what we're doing for them. A lot of Americans couldn't believe that they were actually able to begin to establish any amount of savings. They can't believe it that a bank account offers a service that actually doesn't systematically try to figure out some way to get you with some gotcha fees. So we see over and over again that our members are excited, and a lot of them think, like, in many ways it's almost too good to be true, and it's really working. I mean, we open up over 250,000 checking accounts every month at this point in time. So we're scaling rapidly and are well over 2.5 million accounts.
Great. Dan, how about you guys? What does the customer feedback look like, and how do you use that to inform future product decisions?
Yeah, sure. It's a great question. So we typically see a high demand for instant transactions, instant payments, instant notifications. The UK, it's pretty common in the UK. In the Eurozone, not as much. So we're able to bring that to the Eurozone when serving our, I think, 28 countries in Europe. I think when we get to the US, we'll see the same. I think there's no real instantaneous payments infrastructure in the US. People are used to using third-party apps like Venmo. I think that we will provide a financial ecosystem that allows customers to move their money instantaneously, no matter what financial product they want to use. And that leads me on to my next point, is that we see a demand for more features and more products. So in Europe, we launched with a debit card and three currency checking accounts. We've since extended that to 28 foreign currency checking accounts. We've since added on a credit line. We've since added on a wealth feature, an insurance feature, and customers are asking for more and more products. We're now moving into a higher interest rate environment, and I think customers will start to focus on savings and maximizing the amount of money or the return they can get on their savings.
Great. Nick, do you have a different perspective to add to customer feedback and product dev?
Not really. I think we're probably all fairly aligned here in the startup community. I think the key here is that we approach, I think, consumer-facing development and app development from a consumer tech angle. So not from a traditional bank angle, not from a whatever else angle, but from an actual consumer tech angle where it's all about fast iteration and getting customer feedback on what you've iterated on and develop your product from there. So go in small incremental steps, which I think makes all of us quite strong to react fast to customer demand.
Okay, Nick, we'll start the next question with you. I can see, at least from the attendee list, there's a lot of interest in the incumbent banking community into what all three companies are doing here. Yep. How are you seeing them react? And I guess the European reaction may presage what's going to happen in the US, but like, how do you see sort of the industry sort of positioning itself?
Yeah, I mean, there is definitely reaction. I think if I recall back in a few years back when we started out N26 or number 26 at a time, there was very little feedback in the market. Like people belittled a little bit what we were doing. It's a classical underdog story, right? Where people don't take you seriously in the beginning. And by now, I think that the feedback you can sense in market and has started to pick up quite quickly, that people take, I think, challenger banks seriously. You see that by launch of certain solutions here in the US, like Fin by Chase. Marcus from Goldman is quite focused on sort of the tech-forward offering of services. You have same reactions in Europe where there's like Body Bank in France or like certain spin-outs basically of the existing bank to have app-only banks. So I think there's definitely a strong reaction. What now remains to be seen whether actually these new products coming out of the incumbent banks will compete and will create as much buzz and excitement in their customer groups as ours do. And that's, I think, is still sort of a work in progress. And we're obviously working hard on our side to come out on top of there.
So Dan, Nick said that he's seeing a lot of like sort of competitive products being launched by incumbents. What are you guys seeing? Are you seeing something similar? Are you seeing any incumbents reaching out and trying to find a way to partner or just work together?
Yeah, I think when it comes to incumbents, it's pretty interesting. I've been with Revolut for quite a long time. In the early days, the incumbents didn't want to speak to us. They're now chasing us up to see what they can learn from us and see how they can partner with us. I think they are launching some interesting products, but I don't see one institution that offers a full product suite with great interoperability between the products, and that's what we deliver.
How about you, Chris? What are you seeing some of the incumbents, sort of being fast or medium fast followers? Like, are they using you for outsourced product dev? Like, ideas? What's happening with Chime?
Well, I see a lot of investments in advertising campaigns about reinvention and reimagining and all these sorts of marketing buzzwords. And I also see that there are, new websites that are targeted towards a more millennial audience. But to me, I think it's inauthentic to, simply create a website and put a bunch of kids dancing at Coachella and emojis on the page and say, "Oh, I've got the product for millennials. Here we go." I think I just think it's completely inauthentic. And to be honest, I think it's kind of weak. These are some of the best brands in the history of American business. And they shouldn't have to hide behind new brands in order to target this population. They should focus, in my opinion, on creating better core banking services and leveraging the great brands that they've had. And but if Chime and others on this webcast and other companies that are sort of pushing the envelope in this area can make a dent on improving the way banking products are priced in America, how they're delivered, creating better user experiences, I think that's generally an overall positive force for our country, and we're proud to play a role in that regard.
Yeah, it's incredible ethos, and regardless of what happens, it feels like you're helping to forward that sort of that discussion. Dan, where do you think all this leads? Right, like, do you see yourself like eventually? Well, I guess I'm asking a little bit more for some inside baseball. Like, you guys announced today that you're creating a team to go global. You've got global licensing team. We wrote about that on the site today. But where do you see this playing out, man? You're really, Revolut is set on becoming a global bank. What does that look like 3 years from now?
Well, let me address
in advance.
Yeah, sure. So, look, Revolut wants to be able to provide services to everyone. Nikolai, our founder, often uses the words, "We do things 10 times better and 10 times cheaper than incumbents." And we want to make that available to everyone, not only in the US, but globally. I'm not sure how the other challengers' roadmap will play out, but I personally see a few, maybe 2 or 3 major global players that are able to reach large proportions of the worldwide population. I also think you'll see a simplification of previously hard to understand financial products and services, whether that's on the investing and saving side or on the borrowing side, or really any other line of business. I think that financial services are really complicated and they don't need to be.
Nick, what do you think about that?
Makes sense. I think there will be a few, and this is potentially also different in terms of how people used to traditionally think about banking, which was, after all, I mean, there's a few exceptions of like global incumbents, quote unquote, where people or incumbents operate across geographies. But I think a phenomenon of having a global consumer-facing bank that operates across, 20 markets plus, and has 100 million customers is really something new. And again, it's a little bit borrowed also from the consumer tech movements that we've seen in the past around Spotify, Netflix, and so forth. So I think there's definitely going to be an angle there around strong global brands in banking that then do, and this is, I think, very sometimes hard to understand for people, is that interlink a lot of different services and offerings in one platform. So offering basically everything out of one app globally from lending to savings to investments to whatever other features, insurance, et cetera, and do that in a seamless and smooth way is, I think, where basically some of the winners in the challenger bank, or frankly even broader financial tech world will be, is exactly there, being that global marketplace that offers the interoperability that Dan mentioned across platforms and products.
And Chris, what's Chime's perspective on this? Obviously, these are European banks coming to the U.S. From your perspective, where does this play, at least from a geographic competitive point of view?
I think the ambitious plans that these guys have are admirable. So got a lot of respect for that. For us, I wouldn't say we don't have a strategy of becoming a bank. We have a strategy of providing great products and services for a consumer segment that we know really well in the United States. I can tell you, my customer couldn't care less if I'm operating in 75 or 100 countries. They want a great product at a low price that actually helps them manage their day-to-day finances and move their financial life ahead. So we operate in a huge market and one that is very poorly served by the incumbents. So we're going to spend our time and our focus on making sure that we have a product roadmap that delivers against the core needs of our segment here in America before we start thinking about 50 other markets.
And how about from a product point of view, as Nick just mentioned, N26, it sounds like N26's perspective is that it's one app that kind of encompass a lot of financial services. Chime looks like it's heading in that direction. How do you think about that?
Yeah, I mean, we don't look at ourselves as the checking account and debit card company. We want to offer a range of financial services. We also believe that consumers own their data. So if you want to connect to another bank or brokerage app or you name the service, it's your data, and we want to make it as easy as possible for you to have interoperability with other services. I think that's a very different point of view than incumbents who sort of want to, keep their consumers within their walled garden and only sell them their own products. We certainly have plans to move beyond just spending and saving, and over time you'll see us get more actively involved in helping our members in the areas of borrowing, building credit, and eventually investing as well. So we have aspirations to get into the full range of financial services, but we also philosophically believe that the world is becoming more open and connected. And if consumers want to link up with other services, we're going to try to make that as easy as possible for them.
So it's a bifurcated model where you're going to produce your own services, but also enable customers to open Chime up so that they could interact with their choice of a financial provider as well.
Yeah, I mean, we own the core checking account relationship. Mm-hmm. So our members get direct deposit of their paycheck into the Chime account. And then from there, we want to play a role increasingly in an automated way to move the money into the places that are going to help them achieve long-term financial success. So that might be topping off a savings account, paying off high interest debt. And then if and when those, you've checked the box on those sorts of things, thinking about investing, probably starting with an IRA and then in the stock market.
Great. Dan, can you give Revolut's perspective on, I guess, product portfolio? Like, how far are you taking in terms of being the one-stop shop?
As far as we can. We want to offer all financial products and, within our ecosystem. For example, we also have a corporate product, Revolut for Business, which typically SMEs, and there are a few big cap companies that use our service. With our service, they have a set of currency accounts. They can make global remittances, receive inbound payments. We're now adding on acquiring to that account. So our business customers can receive e-commerce or even point of sale acquiring without a ridiculous fee. So it's really about building the ecosystem for all of our, all different levels of customers, whether you're a low-income retail customer, whether you're a wealthy expat, whether you're a small business, a large business, or a blue chip company. That's really where we're taking this, and creating this all-encompassing financial ecosystem.
Great. Another question. It's a question I have, and it's actually come through a couple times in the question section here. And I'm addressing this to you, Dan. Revolut has spoken a few times about its business model. We've written about it. You have a free version of the app as well as some premium versions. Can you build a big banking business off of free?
So let's start with, can you build a small banking business off free? Absolutely. Can you build a big banking business from free? Then double, absolutely. Pick apart the financials of any publicly traded bank. If you go to a very granular level of detail, you can see that these institutions waste a whole lot of money. They have a lot of inefficient processes. So we can build a small bank efficiently and offer great free products for our consumers. We can build a big bank even more efficiently. There are scales of magnitude that increase profitability, increase gross margin, and just fuel the fire or the engine for us to expand and deliver these products to different geographies around the globe.
Great, Chris. You mentioned before sort of this ethos that you feel like is not just Chime, but something that you're helping to share, expose the entire financial industry to, which is fair services, good prices. How do you guys think about pricing and this free model?
Well, I think in financial services, clearly free or close to free is what's winning. If you look at the growth of companies like Robinhood or even the guys here, the European banks, the free or close to free is clearly a winning formula, and so I think you can make a business work off of free if you have the right technology approach and if you operate the core of your tech stack in-house, and if you're able to do that using modern technology, then I think you're very well positioned to start with free. And over time, I think every new product that we roll out, we will look through the lens of, is this actually going to help our members' financial life in some way? And so if it's not free, it's certainly going to be pretty darn close to it. But certainly as it relates to the core checking and savings accounts, there's really no reason, we believe, why consumers should have to pay a fee to give someone else their money. It doesn't make a whole lot of sense to us.
And Nick, how would you in N26 address that?
So I don't want to sort of recite what's already been mentioned here, which I kind of agree with. The only thing that I would like to add is everybody's always focused on this free concept, which makes sense, and a lot of customers do want, I call it always attractively priced services. I don't necessarily call it free, because what we found with our product, if you actually build truly exciting features and provide a value add to customers, people are also happy to pay for it, but in a way where it's transparent and sort of they actually get additional service for what they're paying for. It doesn't just necessarily, finance or banking doesn't just need to be free, it needs to be a good price for what you're getting. And so from that perspective, even on the revenue side of the scale, not just we have more or less no cost, yes, but also on the revenue side of the scale, if you build the right products, you can actually sustain in profitable and operating business.
That's an interesting point. We're getting to the last of my prepared questions, and this is something we like to address, to ask guests on both the podcast and our webinars. What are your big goals for 2019? Almost the end of January. You're looking out. Nick, I sort of asked you this a few weeks ago when you're on the podcast, but what should we expect to hear from N26 and see from N26 this year?
Product launch. I'm really excited about that. Finally coming out of the gates and sort of like working then with the early users to get feedback on the product and just like a blowout start that we had in all the other markets that we currently launched into. So we're very excited about that, and that is the only goal currently that I'm focusing on for the next for 2019.
Great. Chris?
Well, we're heads down focused on building out our team. So we'll probably add over 100 new Chimers to our headquarters here in San Francisco, aggressively building out the team. And at the same time, continued our rapid growth. We'll add millions of new checking accounts this year, a few million at least. And we will also continue to add additional features beyond just the core spending account and savings account and debit card, but additional features that help our members in the areas of credit building, and that sort of thing. Okay, great. Dan, how about Revolut?
It was pretty similar to Nick and N26. We want to launch a business, get out of the gates, in a few other markets as well. I can't really speak to those because they're handled by my colleagues, but I'll also say that we're launching commission-free trading in Europe, and we'll also start deploying our banking charter, start deploying full banking services in Europe.
Great. So that pretty much does it. We're having a lot of questions come in, so I want to be able to save some time for that. We're going to move to the lightning round section. So we're just going to go rapidly through. I'll start with you, Dan. Let's start, and these are just, you don't have to give much of an explanation, but we just kind of want to hear the answers. Your favorite financial institution that's not your own?
I thought this through and through, and I can't think. I'm sorry.
Wow. Okay. Chris?
Square.
Okay. That's awesome. Nick?
Cool. I was thinking WeChat. I think their platform is pretty amazing, what they've built in China.
Interesting that you would include that as a financial institution, but yes, definitely a financial platform. Least favorite financial service, Nick?
For me, the experience of opening a bank account here in the US as an expat has been like the worst ever. And I think that's probably what I would mention here.
That's probably true everywhere. Chris?
Oh, I can't name names, but let's just say any of the top three or four banks I would have up there. I tried to close an account a couple weeks ago, and they wouldn't close it. I had to go back, fill out paperwork. It was a joke.
We had a question that came in on the side. I'm just going to insert it here. What's your, when you think of technology companies, who do you look up to? So sort of the favorite question, but not for a financial institution, but for technology companies. Dan?
Sorry, could you repeat that?
Sure.
When
you look to technology companies, what are your favorite technology companies?
In fintech,
No,
financial technology companies?
No, just technology. Yeah.
Wow, I'm not prepared for this one. What technology companies do I like right now? I'm gonna have to skip. I haven't got a.
Right.
I'm sorry.
Can we improvise?
Amazon. I'll go Amazon. I mean, they just focus on the customer and create great service and wake up in the morning trying to figure out how to reduce fees, not increase them.
Nick, you mentioned Spotify before. You're going to go with Spotify?
I was just thinking now. I think it's Airbnb, actually. Their rigorous user and design focus amazes me every day.
Great. Least favorite sport? We'll start with Chris.
I love all sports, but I'll go with bowling.
Bowling. Okay, Dan?
Snowboarding, since I'm a skier.
They're annoying, right?
Right.
Nick?
So I'm going to counter Dan like skiers because I'm a snowboarder.
Nice. So at Revolut N26 rivalry coming here.
Right.
Let's start with Nick. Your spirit animal and your company's spirit animal.
Yeah, look, I thought about that quickly when that popped up. So I think the company spirit animal, we were thinking of something like gazelle or something like really, fast and nimble type of thing. I think that represents as well. In terms of my own spirit animal, I'm really not sure.
Okay. Dan, you going to take this one?
Given that I'm leading US expansion, I'm going to take the eagle for both.
Nice. Hey, Chris, you and Chime?
Given it's the Super Bowl week and I really don't like the Patriots, I'm going to say my personal spirit animal is the Ram. And for the company, I don't really know. I was thinking maybe an elephant. It's the smartest animal, and people think that the lion's the king of the jungle, but it's really the elephant.
Nobody messes with him. Yeah. Best business book you've read recently, Chris?
I read Bad Blood, the story about Theranos, which is a good case example of everything not to do in business. But lots of learnings around great salespeople, but lots of learnings about transparency and hiring people that you actually want and accept feedback from on doing better, and admitting mistakes and not always believing your own hype, I think, are good words to live by. Stay humble. Yeah, it's a fascinating book. Nick, what have you read that's interesting?
So this is very techy, but I read this book. There's a book by Blitzscaling, basically. I'm not even sure when it came out, but I recently read it. I could sympathize with a lot of the examples and things in there just for our own company.
Dan, something you've read recently?
Blitzscaling is great. I was thinking of mentioning that, but Shoe Dog's a great book by Phil Knight on Nike.
We actually have some questions in queue about blockchain. What do you guys think, hero or zero? We'll start with you, Dan.
Hero.
Okay. Chris?
I think long-term hero.
Short-term?
I'm not checking my Coinbase app as much as I used to.
Okay. Nick, what about you?
Yeah, hero. Especially long-term, I think on the infrastructure side, there's a lot that can be done there.
Great. So that concludes the lightning round. You guys were great. We have a lot of questions coming through, so I want to give enough time so that we can get these through. Let's start here. So Nikhil asks, for consumer tech companies, acquiring hundreds of millions of users enables network effects and the ability to aggregate content like Netflix or advertising for Facebook, supply chains for Amazon. Do you guys see that there might be similar returns for scale for fintech banks? Give you a sec to think about it. Dan, you're nodding.
Yeah, I mean, absolutely, right. Focusing on our financial services, it all links back to that ecosystem. If you can attract a large consumer base with what I would call pretty vanilla financial products, which are great to use, they're cheap and fair, then you can offer up and serve up other financial products which the customers may not typically use. So yeah.
Nick, what about you? Do you think that there's any network effects?
Yeah, for sure. I mean, on the platform side, the more users interact with your platform and sort of use your services, the more data you collect and the better you make these services for the users. I think this is a very important point. We're not like trying to use this data to just against the user, but actually for the user, and make the experience and other products more seamless. And there's also a sort of, I'm not sure it strictly qualifies as a network effect, but there is an element of financial needs of humans, I'd call them, whether they sit in the US or the UK or Germany. And they're actually fairly similar. Like people want to maybe, save money or like get return on money that they have spare, or they want to make sure they get some additional money that they currently don't have. And all these services actually, in my mind, I know there's a lot of different financial products in different countries and they all have their little intricacies, but bottom line, the needs are actually quite the same. So if you manage to build products that focus on these needs and plug and play in the background, the services that basically cater to these needs in the respective countries, a huge leverage you have on the platform around sort of the user journeys as they go through your network.
Got it. And Chris, what about you?
Yeah, one of the most exciting things about our business over the last year or so is we've significantly increased our acquisition spend. We're doing television ads during NFL games and very much boosting our brand awareness and driving enrollments. But at the same time, we're actually increasing the rate at which we get signups from organic word of mouth and referrals. So I think that points to the notion that if you deliver a great product and a great service to people, that they'll tell their friends about it. And so we've been really excited about that. And on the other side, once we get one of our members to engage with us and sign up for an account, the level of engagement is off the charts. I mean, our average member is in our app almost 25 days out of the month. So it's the level of engagement is huge and gives us a great platform to suggest other relevant services to help their financial life and potentially other parts of their life too.
Great. Chris, what's worse, competing with crowded fintech landscape or the big banks?
Well, we do notice these banks are starting to buy our keywords. To be honest, I think we're really in the early days. So, I mean, even the guys on the line, all these guys on the phone are saying how they're coming to the States, but they're not here yet. So maybe ask me in a year how I feel about that. Right now, I think everyone on this call and so many of these fintechs are great positive forces in the world. So in some ways, I'm sort of cheering for all of them, but and I think it's not a winner-take-all market. But I think we're very well positioned to take a good amount of market share from many of the traditional players who aren't delivering services that consumers are connecting with.
How about you guys, Nick? Or do you have which is worse, competing with the fintech or competing with the fintech market or competing with the big banks? Are you feeling any pressure?
Yeah, I'm not sure. Dan, I'll let you go afterwards. From my side, we're actually not that focused on competition for now. So we're very heads down on sort of what is right for our intermediate user base and future users. Obviously, we look at what competitors do and so forth, but I don't think I've ever sat there and thought what I'm scared of more, quote unquote. For me, it's all about opportunity at this stage, and I think we're not in this competitive mindset yet.
Okay, Dan, similar.
Similar to Nick, but the opposite to Chris, because in Europe there are so many fintechs. It's incredibly easy to license in Europe. For instance, with the FCA, the capital requirements for an electronic money license are relatively low, and that really provides a springboard. And that's why there are hundreds of fintechs in Europe. So, look, I wouldn't directly. I'm not going to directly answer the question on what's worse, fintechs or big banks, but I'm going to outline the differences between the US and Europe. I also can relate to what Nick said. We wake up every morning and think, look, how can we launch better products and better serve our customers? And that really has put us at the front in terms of the number of users and engagement, and we're able to execute very quickly.
Great. Another question. I guess we can start with Chris. How does customer support help account holders interact with you effectively and efficiently? Are there long waits for help? How do you think about customer service and support?
Well, we generally service a population that's a little bit younger, late 20s, early 30s. And if you read research on the segment or just through our own experience, we see that most people actually don't enjoy talking to customer service. There was a Mary Meeker report that did an analysis on millennials and how they'd far prefer to be serviced through chat or Twitter or Facebook, you name it. So we're focused on building great services in the app to allow for as much self-service as possible. But that said, if there's an urgent issue and someone needs to speak with member services, there's always a way to speak with one of our great member services reps live. And we know that this is your money, so it's important to have that option. But I think we see that the majority of our interactions are handled within the app or through automated systems.
How about you, Dan? Customer service, the long waits, or is mostly everything sort of self-serve?
We deliver nearly all customer service through our app. We have an app-based chat mechanism, so customers can reach our support team very easily. It works on their time. I hate calling my bank. It's just a waste of time. I had to do it yesterday, actually. I'm in the US right now. I have to Skype out to England. Wasted about 30 minutes on the phone. So much easier to be able to be, sat relaxing and just talking to an agent on chat through an app.
Okay, Nick, N26.
Yeah, for us, it's self-help is definitely important. Chat has also been successful for us because I think a lot of us, and I include myself, I hate calling people and like timing my schedule to someone else's schedule. So this sort of asynchronous communication around chat has been quite powerful for us. And I can see it with myself in terms of my own preferences, but also our customers like to sort of have this open communication asynchronously. So that has been a very successful channel, but you need to have people picking up the phones at the end of the day. And if someone wants to speak to someone, a human, that still exists basically today, that this need. From that perspective, you need to have a good customer service team. And this is the only, or how I think about our customer service, is actually the only interaction that your customers will ever have sort of face-to-face, i.e. Through phone with you as a bank. So it really needs to be right from that perspective.
Okay. Nick, this is for you. At what point do you make a build, buy, or partner decision? Is everything that N26 does built in-house, or do you look to build, buy, or partner with outside firms?
Yeah, we do both basically.
And I guess, how do you make that decision?
Yeah, exactly. I was just going to start thinking about how we actually go about making the decision. I'm not sure we have a framework around or some sort of key learning to be distilled here. I think when in doubt, we try to do it in-house, frankly, because we trust our own engineers and own capabilities the most. Also, when you work with third parties, there is inherently always some conflict of interest one way or another. So I think it's often good to in-house as much as you can. Obviously, there's some services that we will never be good at or the best at, and so these we'll outsource. So I think, so I think the only rule that I can probably distill is when in doubt, we'll try to do it ourselves. And at the end of the day, it's all what's best for our customers, what's best for the business discussion, which is very case by case.
Dan, how does Revolut approach like new products and whether build, buy, or partner?
We always try and bring them in-house where possible. Simple as that.
Okay. Chris, how about Chime?
Yeah, I mean, we if it's a commodity type service, we would we're okay just renting that. But for the most part, we try to build as much of the tech in-house. And if there's certain capabilities that we want to build, we're certainly open to acquisition. We did an acquisition at the end of second half of last year. We bought a company called Pinch that was in the credit building space, and got a great group of leaders coming out of that. And that will help to inform some of our product plans for this coming year.
Okay, Chris, I have another question for you. It's from Elliot in the crowd. All you guys are growing like weeds, and so challenger banks have been quite successful using their customers as a marketing distribution channel, kind of the refer a friend. You've all mentioned it one way or another. Are you finding that growth is linear? Are there only a limited supply of people who are willing to evangelize, or do you see that as like a long-term growth strategy?
No, like I said earlier, we're actually seeing the rate at which people refer is increasing while we significantly increase the size of the population. And it doesn't just it doesn't just happen early in the life of the relationship with us. We track this pretty rigorously. And we see that, even many months into the relationship, beyond just the initial honeymoon phase when people are really excited that they've got this new thing, we continue to see our members refer friends and family and coworkers, into the second and third year of the relationship with us. So we don't see any signs of it slowing. We certainly try to make it as easy as possible for people to refer friends, and we've got a few exciting new product features that we're going to roll out for our most highly referring members. So stay tuned.
Nick, how does N26 see the sort of customer refer a friend, word of mouth type of marketing?
Yeah. I mean, it is the channel for us. So well beyond 50% come through organic channels, how we call them. It is funny, like everybody has continuously told us or advised us that we need to be careful how this ratio will go down, or sort of the organic to total sign up ratio will deteriorate over time, and you will have to pay up for customers. We've, similar to Chris, we've seen it for us. We've seen it stay constant, even slightly increase. as we grow in size and we keep on adding, like we're now 2.3 million customers in Europe. So from really the early days where we just a couple of whatever tens or hundreds signing up to now, that ratio has really kept constant or increased, which is really a testament to what we're doing and really excites us and keeps us going.
How about you, Dan, and Revolut?
Yeah, again, it's the main channel, organic word of mouth growth. Our customers are typically a little bit older than what Chris mentioned. We see mid 30s. We also see a large segment in the sort of 40 to 50 years old range. I'll say we also invest a lot of money in a lot of time and resource in physical Revolut demonstrations. We call them Revolut rallies. So we host these in cities throughout Europe, and we have a great following. It feels like there's a lot of camaraderie behind the Revolut brand and taking on and creating better products than the incumbents.
Awesome. We have time for one last question, and everybody can get on for the day. But first, we're going to publish a poll. We did just a quick poll of must-have features for U.S. challenger banks. We'd love to hear from the audience. We'll take just a second to pause for this. But if we can go ahead and publish that. Just get a feel. And I don't know if we did a good enough job including lots of different functionality, but I'll be happy to share this around afterwards.
I like this polling feature. That's a cool idea.
Yeah.
Just gave my vote here.
Let's give it a few more seconds. Nobody likes insurance in a banking app. That's interesting. So as everybody's finishing up there, I guess, Dan, we can start a question. This will be our last question. And you did mention this, everybody has one way or another, but the difference between a consumer bank and a business bank, how are you thinking about expanding into the business market in the US particularly?
Yeah, it's a great question. We want to deliver the same product that we have in Europe in the US. As with pretty much everything, coming from Europe and taking it to the US, the underlying mechanics and infrastructure are vastly different. So it will be challenging to deliver the product in exactly the same way, but we will endeavor to do that.
Okay, Chris, how about you?
I'm sorry, I was just reading the poll. What was the question?
Do you think about business banking? Are you thinking about business banking in addition to consumer banking?
No.
Okay, just focus on the consumer for now.
For now.
Okay. And Nick, I know you have different types of premium accounts. How do you guys think about the business side?
Yeah, we have a sort of freelance business product in Europe, which is doing quite well. Here in the US, for now, for me, it's focus. So we'll start out with a consumer proposition. Where it takes us from here, I don't want to specify yet, but for now, it's consumer for the US.
If I lied, I'm going to add one last question and let everybody go. John just asked, what are you going to do about the fact that consumers in the US particularly love credit cards? I don't want to move my spend to debit. Nick, have you thought about that?
Yep, we have. There's basically two solutions. So there's two reasons, or there's probably more, but there's two key drivers of why people select a credit card. I think on the one side, it's basically for increasing rewards points and sort of cash kickbacks. The other reason is to actually get the line of credit and sort of have an outstanding balance on the credit card. I think both of these drivers behind selecting a credit card, you could potentially actually show or cover these needs with different type of products and credit cards. So from that perspective, there's other angles instead of making sure you cover these needs, and that's what we're currently following. But definitely are also looking very closely at a credit card proposition here.
Dan and Chris, do you guys have something to add to that?
Well, I mean, we started with a focus on consumers that prefer to pay with debit cards. There's actually, if you look at the transaction data at Visa and MasterCard, there's actually more debit card transactions than credit card transactions in the US. So that has certainly been our starting point for people that prefer the control of a debit card. But that said, we think credit cards are can be a great product and very helpful, and certainly there's a desire among Americans to continue to improve their credit score. So I think over time we're very interested in exploring the credit card market as well.
Okay, Dan.
Yeah, we are going to launch a credit card.
Okay, interesting. Everybody keep your eyes open. I think with that, we're going to call it, I know there's still a few questions left in queue, but we're going to call it quits here. Chris, Nick, and Dan, thank you so much for sharing your time and your insight on the banking industry with us. We all look forward to all the moves that you guys are going to make this year, and wish you guys, the two brands here launching, we wish you good luck, and Chris, wish you good luck continuing to grow Chime in the US. Thank everybody for joining. This is going to be an ongoing series. We like to do a hot topic, I think, every single month. Something like this that's interactive with the community, getting some of the business leaders who are helping to drive the change. This is perfect type of content. So I'd like to thank everybody else for joining us. We did have a few questions about whether this will be recorded. It is being recorded, and we'll be happy to share that with everybody as well. And I don't know if you guys are open, the co-host here, but if we didn't get to all the questions, I'll share some of the questions that didn't get answered with you guys. You guys can determine if you want to answer them or not, and I can forward those around as well. So with that, I think we're going to call the end to this the Challenger Bank webinar, and thank everybody for joining us. Be well, everybody.
Bye, Zach.
Have a good year.
Thanks, guys.
Bye-bye.
Thanks.